Ryan, good to see you. We start with an important question. Are you tax ready for retirement? Taxes don't disappear in retirement as much as we would hope they do. In fact, understanding tax implications becomes even more important. So let's talk through 4 tax questions that you ask your advisor before you retire. And the first question is, how will my tax situation change once I retire?
Yeah, and it does change that definitely because while you're working, most people you're getting a paycheck. You get that paycheck, every 2 weeks. You get the W-2 in the mail at the end of the year, and for most people, that's the majority of your income. But once you retire, now it's very likely you're going to be receiving income from various sources. Could be Social Security. It could be withdrawing money from an IRA or 401k. It could be maybe taking money from a taxable account, and all these different income sources are taxed differently. And then understanding how that works and how much to withdraw from these different accounts, it's so important, Aaron.
And all these questions are, of course, interrelated, but that does bring us to number 2. Are there strategies to reduce my tax liability in retirement?
And there definitely are. For example, like I just mentioned, coordinating your withdrawal plan in retirement is so important. So
Mhm.
thinking through, okay, this is how much money I need on an after tax basis. And then how am I going to make that work? For example, if you withdraw money from, let's say, an IRA, which is you withdraw, let's say you fund it all with pre-tax dollars, that's going to be subject to ordinary income tax versus maybe taking money out of a Roth IRA. And now, as long as it's a qualified distribution, that's going to be tax free. So figuring out, when you're going to withdraw money from where, what are the consequences of taking out that next dollar or that next $1,000 when you take that out? What are the tax ramifications on there? And what a lot of people don't think about here too, Aaron, is that when you withdraw money from these different income sources, it can have other ramifications, such as maybe causing more of your Social Security benefits to become subject to tax, maybe bumping you into higher bracket, and now you're going to have to pay for the IRMA surcharge for Medicare, right? So there's all these different things that need to be considered when structuring that withdrawal plan in order to help minimize your taxes there in retirement.
Mhm. And then another strategy, which you and I have talked about before, Ryan, would be a Roth conversion. And that brings us to our next question. Should I consider a Roth conversion before I stop working?
Yeah, so good question. And this is definitely going to be on a case by case basis because in part it depends, okay, what's my income today? Where am I within the tax brackets? And if I do convert, how much should I convert? If I convert, X amount of dollars, am I still going to remain maybe in the same tax bracket and that's the objective? Or might I get moved up into the higher tax bracket on that additional money? So thinking through, okay, where am I today? How much would I have to pay tax on it? And then looking at the back end, so to speak, in retirement, in how much you're likely to have to pay in tax then. Now, of course,
Mhm.
we don't know what tax rates are going to be. They could certainly rise in the future. And I would expect that over the course of the next several years, they will rise just because our national debt is so huge. But a big part of this, too, Aaron, I should touch on is that it depends on how much you have saved already
Right,
and where you have that saved.
right.
Do you already have a ton of money in a Roth IRA? Well, maybe you don't need to do another conversion. Or maybe you have so much money in pre-tax and now it makes sense to start considering that. So
Mhm.
it's a case by case basis. It's just a matter of running the numbers, doing the analysis, and really seeing what works for you.
Right. And only because it's so important, it does bear repeating. The last question comes down to your withdrawal strategy, which you did just touch on, but you have to fully understand the tax implications of withdrawing from your various accounts. And we have this conversation now, Ryan, of course, because a lot of us have been conditioned to save in that tax deferred triangle, which creates a liability in retirement.
It does. And it's not to say it's a bad thing. You've saved up, you've done a great job of saving, let's say in a 401k plan or other, some other sort of pre-tax retirement account. But we have to be mindful. We have to, think about that in retirement. When we need income, maybe, you have Social Security, but then we need income on top of that. If all of our savings dollars, our investments are in these pre-tax retirement accounts, every time we take money out of these, that money is going to be subject to ordinary income
Right.
tax. And
Right.
the other thing is we give up a ton of flexibility because of the RMDs, which are the required minimum distributions, which
Good point.
depending on the year you were born, you have to start taking those sometime in your 70s. And
Hmm.
for some people, you have to withdraw more money than you even want to from these RMDs, pay taxes on that, and it could cause other things to be to cost more, such as maybe
Hmm.
to pay more or more of your Social Security benefits to become subject to tax, as an
Right.
example I mentioned
Right.
earlier.
Really good point. Whereas those Roth accounts do not have RMDs.
Very true. And that's a nice benefit of
Yeah.
a Roth IRA account.
Hmm. I'm so glad we got to talk this through. Ryan, what becomes apparent as we talk through these questions is the sooner that you can ask these questions of an advisor, the more well prepared you will be for retirement. So if somebody wants to talk to you and reach out, Ryan, what's the best way to get a hold of you?
Welcome to call 714-462-9155 or go to the websites kravitzfinancial.com. Go to the contact page there and submit a message.
Great. Ryan, thank you.
Thank you.